So, right, let's just kick things off. If you've got any questions, just pop them in the comments section and we'll do our best to answer them. But we've got some, so we'll start off with some questions that we frequently get answered, or because we know that self-assessment is a very confusing.
It is.
Maybe not so for you, you've been dealing with this for many, many years, but for anyone else.
Are you suggesting I'm old, Jenny?
No. Even though you wouldn't believe
straight
it.
Into that one.
I know I did, sorry. But yes, so we know it's confusing. There is no such thing as a silly question. No. Ask anything at all. It might seem really basic, but you can guarantee that someone else is thinking the same question.
Absolutely,
so please just ask away and just make the most of us being here. Emily being here to answer them. Mm-hmm. So thinking back to kind of basics, who has to actually file a tax return?
That's a very good question. So who actually has to file a tax return? If you run your own business, you almost certainly will have to file a tax return. So if you're a sole trader, if you're in partnership, if you are the director of a limited company, you will almost certainly have to file a tax return. Basically, it's if you've got income that the government, the taxman, doesn't yet know about, you're almost certainly going to have to do a tax return. So income the taxman knows about might be, for example, income from a job or income from a pension, because your employer or the pension fund has to report to the taxman to tell them who they're paying and how much. But there's other income, for instance, income you earn as a sole trader, rental income you get from a property. The taxman doesn't know about that unless you actually put it on a tax return and tell them. So that's why you would nearly always need to do a tax return as a business owner. If you're the director of a limited company, yes, right enough, the government already knows about your salary, but you're probably also going to be taking dividends from the company, which the government doesn't know about. So what you need to do is to fill in a tax return and put on there all of your taxable income. So that includes your salary, even though the government already know about it. You tell them how much you've earned and how much tax was deducted from your wages. That way, the government knows about your income in the round as an individual. But if you make sure to put in your tax figure that's already being deducted from your wages, you won't be able to pay that tax again. It's just for a memo. So, as I say, if you are the owner of a small business, you will almost certainly need to do a tax return.
Thank you. See, no even just a question as simple as who has to file is absolutely not that simple. So
no, it's not.
Ask anything at all.
Yes.
And importantly, I guess, when does the tax return have to be filed by?
Well, you touched on this in the introduction, Jenny. It's by the end of November. There's not November. What am I talking about?
I was going to say, have things changed?
It was going to be November. It's January, not November. It was going to be November.
You just sent everyone into panic mode.
Yes, I did, didn't I? There was a suggestion years ago that the deadline should be shifted to the end of November. That's probably what crossed my mind. It's not November. It's January, the end of January. There are two possible deadlines for filing a tax return. If you're going to do it on paper, you have to do it by the end of October. If it's going to be online, then it's by the end of January. And it's for the period covering the 6th of April to the 5th of April. So the tax return that's got to be in by the end of January 2024 is the tax return that covers the period from the 6th of April 2022 to the 5th of April 2023.
That's what gets me every year. I can never get my head around that.
Yep.
So we've got a question in from Dorothy. So thank you, Dorothy. Oh, hang on, just popped up a bit.
Yes.
Is it compulsory to download the information from FreeAgent to HMRC even if I haven't completed a full year of FreeAgent? My financial year is November 21 to October 22, and I only started FreeAgent in May 22.
Okay, Dorothy, well, that would depend on what you've put into FreeAgent. If you put in your opening balances as at the beginning of May 22, so if you put in, for instance, the sales and costs that you had between November 21 and April 22, if you put all those in as opening balances, you quite possibly would be able to file your tax return from FreeAgent for this time around. If that information isn't in FreeAgent, then because you need to send complete information to HMRC, you might be better advised to file outside for this time round. It's a matter of sending complete figures to HMRC. You don't have to do it through FreeAgent, even if you've got a FreeAgent account. It might just be easier for you to do it. If you're not sure what opening balances need to go in, we do have some guidance in our knowledge base that deals with how to enter opening balances, or you could ask our support team to send you that guidance. What our support team can't do is tell you exactly what opening balances to put where. We're not allowed to give accounting advice. We're not allowed to give guidance on how to fill in the tax return, but we can give you a steer in the right direction by sending you that guidance.
Thank you.
No problem.
I hope that helps, Dorothy. If not, or if you like clarity on anything, just let us know.
Yeah.
We actually had thank you. We actually had a question earlier as well.
Yes.
From Wanda, I believe. She said, "I'm a bit confused about when to submit the accounts to HMRC with regard to accounting period. I finished working in
an LLP, yep, in a limited liability partnership, yep.
In November 22, returns completed and filed with HMRC, that's all sorted. Have only worked between July 23 and October 23 as self-employed. I'm now retired. Do I submit the returns by January 24 or January 25?
January 25 is the answer for that one, Wanda. If you were not if you've done your LLP figures, sorry Jenny, could you scroll down so I can see the question? Thank you. So anything that you, if you took a salary from the LLP, I understand some LLPs do pay salaries, others you do drawings, then that would be up to November 22, and you would put that on your tax return for 22-23 if you have to do one. As a self-employed person working, if you started your business in July 23, that tips you into the next tax year. That is going to be filed by January 2025. If you'd started your sole trade as soon as you finished in the LLP in November 22, then you would have a tax return to do by January 24. I keep saying November.
You're willing it to be changed.
I'm not. I don't want it to be November. By the end of January 24. But because you didn't start your business until July 2023, you've got until the end of January 2025 to do that tax return. And I think the next question is the same thing. Yep. That's the same wording, so I think it's
question from
Contented Souls Podiatry. Is that you, Wanda? If it isn't, then please do let us know.
Yeah. So hopefully that answers everything. See, it's not just me that gets bamboozled by the dates of all the different years.
Exactly.
Like, is it this year or was it last year?
Yeah, absolutely right. Yes.
You're welcome.
That's a pleasure.
So yeah, thank you so much. I don't know how you retain all this information.
Well, I don't. I keep saying it's
November. Yes, thank you. And any more questions, just keep them coming in. Anything at all, please just ask. Just thinking of some other questions that you frequently get asked, because obviously this time of year up until the deadline is very busy for support.
Yes,
so I know we get lots and lots of questions coming in. So could you just give me some examples of what income has to go on a tax return and what doesn't?
Yes, I absolutely can.
Thank you.
So what you put on a tax return is all your taxable income, including income that HMRC already knows about, as we discussed earlier. So if you've got, for example, income from a job, say you're a sole trader, you're self-employed, you've got your income and your day-to-day running costs from the business, those go on your tax return. So does the income from your job, even though HMRC already know about it, because they need the information about your income in the round. But I keep saying taxable income. That's because if they've got income that is paid free of tax, such as interest on an ISA, then you wouldn't need to put it on your tax return at all. You leave that out. That is because if it's not taxable, then HMRC don't need to know about it. So if you have got that kind of income, don't put it on your tax return. But otherwise, if HMRC don't know about it, so income from a business, income from a property, perhaps income from a trust, and income that HMRC know about, such as income from a job or income from a pension, don't be fooled into thinking that because the revenue already know about it, you don't need to put it on your tax return. You do. It's only if it's tax-free, such as interest on an ISA, that you leave it on.
Thank you.
No problem.
And could you give some examples of common ways that people could actually save tax?
Yes, so saving tax is an interesting one because you do need to make sure that you're doing it legitimately and legally and ethically. There are very fine dividing lines sometimes between what is okay and what isn't. So do things like put money into a pension fund, make gift aid donations to charity, because you can get some tax relief on that. But be careful, there are pitfalls. So for example, the gift aid donations, you know how when you fill in a gift aid declaration, you actually have to confirm that you are a UK taxpayer and you've paid enough tax. You must have paid enough tax to cover the tax relief that the charity is going to reclaim on your donation, because that's how gift aid works. You earn some income and you choose to give some of that income to charity. You will have paid tax on that income when you earned it. The charity claims back from the government the tax that you would have paid on that money. Or certainly if you're a basic rate taxpayer, that's how it works. If you're a higher rate taxpayer, you get a little bit of extra tax relief as well. The charity gets basic rate tax relief on your donation. If you haven't paid any tax, you actually are supposed to make that good, because the charity has reclaimed from HMRC tax that they never had. So HMRC would be out of pocket in that situation. So in that case, do not make gift aid donations if you haven't paid enough tax to cover what the charity is going to reclaim on it. Another way you can save tax is you can buy equipment for your business. So for example, you might buy a computer to use in your business. In a lot of cases, you'll get 100% of the cost of that equipment. You can use that to reduce the amount of profit you pay tax on. Don't get confused and think that you will reduce the actual tax that you pay. Suppose you've made profit of £50,000. You've also bought a computer for £500. You are going to pay tax on profit of £49,500. You don't say £50,000, work out the tax due on that, and then take off the £500. A lot of people get confused by that. Watch out for it. You reduce the profit, not the tax, when you buy a new piece of equipment. So those are just a few suggestions. You can put money in a pension fund and get tax relief, donate under gift aid and get tax relief, buy yourself some new equipment for your business and get tax relief. But do be honest about what the equipment is and the fact that it is actually for your business. I have had in the past, before I came to work at FreeAgent, I've had customers who tried to put through, for example, their son's new PlayStation as part of business equipment. Nice try, sunshine. You won't get away with that if the taxman ever checks your books. So it has to be legitimate business expenditure. And it also has to be something that the taxman accepts is legitimate business expenditure. So when you're in business, you often use your day-to-day running costs to reduce the amount of profit you pay tax on. There's some day-to-day running costs that the taxman says thou shalt not use to reduce the profit you pay tax on, such as entertaining anybody other than a bona fide employee of your business. So for example, if you take your customers out for a Christmas meal or your suppliers, you are not allowed to use that cost to reduce the amount of profit you pay tax on. The revenue does not believe it's a necessary business expense. You're not allowed to include it. Even if you don't agree with them, I'm afraid they make the rules.
Very true. Thank you. And thinking about actually filling in your tax return, could you give some examples of mistakes that you have seen people make on their tax returns before?
Certainly I can. So in terms of allocating costs, sometimes it won't really make a difference. For instance, if you put a cost to marketing instead of advertising, that's not going to affect your tax position. Other times it does. So the example I just gave about if you entertain anybody who's not a bona fide employee, you need to record that as business entertaining, not as staff entertaining, otherwise your tax figure will be wrong. If you travel in your own car for business, then there's a couple of things to point out with that. Firstly, you can only include actual business journeys, and commuting from home to your permanent workplace isn't a business journey as far as the taxman's concerned. The taxman says you do that journey in order to enable you to live where you do, not to enable you to work where you do. So that is not allowed. The second point is, remember that you can only, if you're claiming the registered mileage allowance, which is set by the revenue for how much you can claim per business mile you travel, do not also include in your books the costs of buying and running the vehicle, because that's what the mileage allowance is there to cover. It's covering all the costs of owning, running, maintaining and repairing the vehicle. The only other costs you can include are those that relate to a specific journey, for example, a car park charge or a toll for a bridge or tunnel or something like that. Those you can include as well as the mileage allowance, but not the other standard costs of running the car. Something else to watch out for is the cost of food and drink when you're out and about on business. This is where the rules can diverge for limited companies and for sole traders. If you're employed by a limited company, then 9 times out of 10 you will be able to claim the cost of food and drink when you're out and about on business. If you're a sole trader, 9 times out of 10 you won't. The government takes the rule that everybody's got to eat in order to live. So if you're a sole trader and you're out and about on business, you can only claim the cost of food and drink if the journey's outside your normal pattern of business. So for instance, say you're normally based in Scotland and you make a one-off trip to London to visit a possible client, you could claim the cost of food and drink on that journey. If your business is by nature itinerant, so if you are, for example, a jobbing gardener, or a chimney sweep, or a builder, somebody who works on different sites all the time, then you might be able to claim the cost of your food and drink. Or if you're staying away overnight on business, then you can claim the costs. Otherwise, I'm afraid you're out of luck. There was a case some years ago when there was a gentleman, I think he was a carpenter, he was doing quite a lot of heavy physical work, and he actually put a legal case in that said, I should be able to claim the cost of my food and drink when I'm working because I'm doing hard physical labour. I therefore need more fuel to keep my body going for work. The taxman said, nice try, pal, can't have it. Yeah, I mean, you'd
always
think...
worth a try.
Exactly, it's worth asking, especially as in the UK the tax rules are often built around legal cases. So if you're not sure, then try and justify it. You might get lucky.
I feel like he was a bit hard done by there.
Well, so do I actually, Jenny. Yes, possibly, and a different judge on a different day might have said, well, it is wholly and exclusively for your work, but unfortunately the one he got didn't.
That was a bad day.
It was a bad day, yeah. Can I just give one more example, Jenny, or am I talking too much?
No,
okay,
please do.
The other example I wanted to give, which has obviously been quite at the forefront of everyone's minds for the last few years, is working from home. When can you include the costs of working from home? This is the opposite of the last situation we looked at. The rules are more generous for sole traders. If you're a sole trader, then you could quite possibly claim a percentage of pretty well all the costs of running your home, things like rent, council tax, interest on a mortgage if you own your home mortgaged, costs such as insurance, business insurance, things like light and heat in your home. You would be able to claim a percentage of that, and you work that out using a fair and reasonable method. And we do have an infographic on our website that addresses one possible way you can work that out. If, on the other hand, you're employed by a limited company, the rules are a lot stricter. For one thing, if you're an employee, you can only claim the cost of working at home if your job dictates you have to work from home. During the COVID pandemic, pretty well everybody's jobs dictated that they had to work from home, unless you were, say, a delivery driver or you were a nurse or something like that. But nowadays, the rules have been tightened up again. You can only claim the cost of working from home if your job requires you to work from home. So, for example, we have some of our sales team at FreeAgent who are based nationwide. Our office is in Edinburgh. The sales team member who looks after Cornwall doesn't live in Edinburgh. It would be completely impractical for them to live in Edinburgh. So they are allowed to claim the cost of working from their home because their job dictates that they have to live a lot nearer than Edinburgh. But for instance, if I choose to work from home 2 or 3 days a week, I live only about 15 miles away from Edinburgh. That's my choice. So I'm not allowed to ask FreeAgent to pay me anything for working from home. And also the other point is that what you're doing at home has to be what's called substantive duties of your employment. What's that in English? It means work that actually earns money for your employer, not something like doing your admin after being on the road making sales. It's being on the road making sales that is earning your company money. So if you're just writing up your books at home, out of luck, you can't claim that if you are employed by a limited company or if you're an employee of any other business in actual fact. If, as an employee, you do fulfil both those criteria, you are only allowed to claim the extra costs that arise as a result of you working at home. So no part of your rent, no part of your council tax, you pay exactly the same whether or not you worked at home. Light and heat and possibly telephone are just about the only ones you can get away with in that situation. So I think I've talked long enough about that question, Jenny.
Honestly, you just every time we do these Q&As. We'll be doing another one in January, by the way, but we do these every year, and every year I learn something new.
So I'm not completely regurgitating the same things again and again. That's good news.
So yeah, we don't have too long left, so if you've got any more questions, don't forget to pop them in the comments. Now is the perfect time. We might be able to answer questions after this Q&A is over, but now is a really good time to get them in. And if you don't fully understand something, then Emily can clarify. So please do, any questions at all, please do pop them in the comments, because like I said, chances are someone else that's tuned in is thinking the same question, but maybe they don't want to be the one to ask it. So
absolutely right. And as Jenny said, there is no such thing as a silly question. You can guarantee I've heard it before, if or pretty much. If somebody, as Jenny says, if somebody else has got that question, they might be feeling a bit shy about asking. So please don't feel shy about asking. There is genuinely no such thing as a silly question. One thing I say to our support team is nobody was born knowing how to fill in a tax return.
It's definitely not.
No, exactly. Do either of your children know how to fill in a tax return, Jenny?
I don't know. They seem very tech savvy, but I think even they wouldn't be that far. So no, absolutely not. Just thinking about this, so we've talked a bit about when the deadline is, and I thought we could talk a bit about what happens if you miss that deadline.
Good idea. That's a good question.
I'm sure everyone who misses the deadline has an excuse, but what is a reasonable excuse? What was,
reasonable excuse is exactly the term the taxman uses. So as we've said, the filing deadline is the end of January. If you miss that, you automatically get fined £100. Even if you file literally first thing in the morning on the 1st of February, it's £100, no questions. And the fines do keep racking up the later you leave filing your tax return. Remember too that filing your tax return and paying your tax are two different things. Don't think that just because you've paid your tax you'll get out of being fined for not filing your tax return, because you won't. You'll still get fined even if all the tax you're due you've paid. Even if you're due a refund from the taxman, you will still get fined if you file your tax return late. Don't do it. If you do find you filed late, then think about why you filed late. As Jenny mentioned, reasonable excuses, and that is what HMRC will look at, or that is what you can put forward to them. Do you actually have a reasonable excuse for not having filed your tax return on time? For instance, were you taken seriously ill in the last week of January? Or, and here's hoping this didn't happen obviously, did you suffer a family bereavement quite recently? The revenue will look kindly on that. Situations like a fire, a flood, obviously we've had some horrendous flooding just recently here in Scotland. If that had destroyed the records of small business owners, they would then have a reasonable excuse if they have had to spend a lot of time getting their records or trying to recreate their records. There, I think they would have a very good reason to say to the taxman, look, there's no way I can do that by the end of January, not with everything else to do in the aftermath of a flood. I remember one year before I moved to Scotland, I lived in Cumbria, and there were horrendous floods in January, and the revenue actually said, anybody who lives in these postcode districts that have been affected by floods, we won't fine you if you get your tax return in late. You don't even have to appeal. We won't fine you. So they will be understanding. But the thing to do with the taxman is, if you're not sure about something, or if you think you're not going to make the deadline, don't hide and think they won't find you, because they will. But they'll look much more favourably on you if you own up about it before the problem arises. So, for instance, obviously, times are hard at the moment. If you think you're going to struggle to pay what tax you owe, don't just hide and hope the revenue won't chase you. Pick up the phone. They do have what they call a time to pay arrangement. You can ask them about the possibility of taking longer to pay your tax bill. You can hopefully set up a scheme that lets you pay part of it each month. but they'll look far more kindly on you if you do that. They may still charge you interest on late payment of tax, but what they won't do is charge you penalties as well, because both of them will start racking up if you don't pay your tax on time. If you think you're going to struggle, don't wait, phone them and put the arrangement in place. Remember, HMRC is staffed by humans. Talk to them on a human level.
I think everyone is automatically so scared of HMRC because they're thinking that it's that they don't have a heart, but really it's like you said, they are people.
They are,
and
yes.
They can be understanding. So
exactly,
yeah.
If you have a genuine reason, yes.
Well, that's the thing, is like, hopefully, God forbid, none of these you don't need a reasonable excuse or anything. But if anything has happened, just be honest and
exactly.
Hopefully you get the help that you need.
Yeah, don't try to spin them a line because they'll see through you. Be honest, tell the truth.
Yeah, exactly. Thank you so much.
No problem.
If there are any other questions, it's your last few minutes if you do want to pop anything in. And like I said, if you have questions after this, you can reach out to us on Facebook or any other social media, and we can see what we can do to help. But ideally now would be the time.
Yes.
Was there anything else that you think would be important to cover?
Yes, there's a couple of things I'd like to address that relate quite closely to what FreeAgent does from a tax point of view. We've just released the unincorporated landlord account type to all of our customers. So if you are a landlord, the properties are owned by you, not by a company, and you rent out your properties, you can now start using FreeAgent to keep your books and hopefully going forward file your tax returns. We're also looking to add the property pages to our limited company and sole trader account types. The idea being that if you're a sole trader and you also rent out some properties, you will soon, we hope, be able to use FreeAgent to file your tax returns. The other thing I'd like to just recap on is something that I touched on earlier, which is what help FreeAgent's support team can give you. FreeAgent's support team are an absolutely fantastic crew. They'll do their best to help you, but they can't tell you how to fill in your tax return. We're not allowed. HMRC don't license us to do that. So if they say to you, you need to speak to your accountant, then please do listen to what they're saying, because it's true. We are not allowed to help fill in your tax return. In a lot of cases, we wish we could, but we're not allowed. So we can help you use FreeAgent. We can help to say, okay, here's how to create invoices, here's how to create costs. A lot of us are experienced qualified accountants or bookkeepers, so hopefully that helps us understand what you're asking and be able to steer you in the right direction if you need help that we can't give you.
That's a very good point. Like our support team are invaluable, and we're currently in our Edinburgh office, and our support team are just down the other end of the corridor, a lot of them. So we are all right here to help if you need it, but there is only so much that we can
that we're allowed to do. Yes, you're right, Jenny.
Yeah, exactly. Okay, if anyone has any last minute questions, pop them in. If not, I think we'll just wrap up there. But thank you so much for sharing all of your knowledge and wisdom. As ever,
Jenny. Thank you for your time.
I hope it's been useful for everyone who's tuned in, or anyone that's perhaps watching the video back. And this video will be posted to our Facebook page. So if you forget something that Emily has said, or if you want to watch it again, it will be on our Facebook page. And we'll put up an event soon for another Q&A session that we'll have towards, I can't remember the exact date, but towards the end of January.
Yes, that's it.
So you can tune in then to ask your relatively last minute self-assessment questions, and we'll be back then to answer your questions. But in the meantime, we hope you found this useful. Thank you so much, Emily.
Thank you, Jenny.
Thank you everyone who's been watching, and thank you for everyone who's asked questions as well.
Yes.
And good luck with your self-assessment tax returns.
Yes, indeed. Thank you very much.
Yeah, thank you so much.
Thanks. Bye-bye.
Thank you. Bye.